Hello everyone, welcome to Prime Investor. When you take a term insurance policy, one of the first questions you will need to answer is how much cover do you need or how much sum assured do you need? If you go by thumb rules, you might say 10 times your annual income, 20 times your annual income, 30 times your annual income. You can use calculators on insurer websites, and depending on the insurer that you're going for, you will get a different amount. But such generalized rules don't really work because what cover you need is different from what cover I need, which would be different from what cover my friend would need. Because each person's financial situation, what they need the insurance for, is going to be unique only to that person. So you need to calculate it correctly, and thumb rules and general rules do not work. So in this video, we are going to show you exactly how to calculate what your term cover should be. No, we are not using Excel. We actually have a calculator on our website and it's free. Anyone can use it. We have a calculator on our website to calculate the term cover required, and that is what we are going to use to actually work it out. Okay, so let's start. First, the basic details, the current age and the age at which you want to retire. So let's say, I'm going to put 30 here and say we want to retire at 60. So, another 30 years left for retirement. Okay. Now, the first step in figuring out life cover, okay, your income or you are contributing to maintaining your family's expenses. So the first thing that your insurance cover should account for is how much expenses that is going to be. Okay, so that is step one. Let's see. Let's assume the family expenses are 75,000. Okay. Now, of this is the entire monthly amount. You might have some expenses that are exclusive only to you. So, if you're not going to be around, those expenses are not going to happen. So, you can deduct that from how much expenses your family will actually have to meet. Okay, so let's say your personal expenses are going to be 15,000. Okay, so for a year, the amount of expenses that your family needs is 7,20,000, and it is this contribution that your insurance should try and cover. Now, this is for 1 year. Obviously, over years, it's going to grow because of inflation. So let's say the inflation is at 6%, and from now until you retire, which we put in the step before this, over the next 30 years at an inflation rate of 6%, the entire expenses that your insurance policy needs to be able to meet is about 5.7 crore. So this is the first step in calculating the total. What are the expenses that you need the insurance money to meet in your absence? 5.7 crore in only monthly expenses. Then, expenses are not the only thing that you're saving towards or what your income is going towards. It's also going towards various goals. It could be your children's education, it could be retirement, it could be anything. So if you're not around, your insurance payout should also manage to meet those goals, because otherwise how are those goals going to be funded? So let's say your child's education is a goal and you need say 30 lakh for that goal. Okay, what you can do here is, if you already have investments towards that goal, say you've already got invested 10 lakhs towards this goal, and that 10 lakhs by the time your goal comes up is going to grow to say 20 lakhs, then what you can do is to reduce this 20 lakh from the total goal amount. So if your goal is 30 lakhs and your investments can grow to 20, your existing investments can grow to 20 lakhs, your net goal amount is only 10 lakhs. So you can put that. Okay, in this case, I'm just saying I need 30 lakhs for children's education. Okay, I am not putting any other goals. If you have other goals, you can just keep adding it. So the total amount that my insurance needs to be able to meet is also this 30 lakh. Then, So this is expenses and this is the goal amount. First step was the expenses, the second step was the goal amount. Now you may also have debt that you have taken it good, especially big debt like home loans or car loans, which are huge amounts. Now, if your insurance does not account for these, then these can be uh, big drains on your family's finances. So you also need to account for the outstanding amount of these loans that you have in arriving at your total insurance cover. What you can do here is assume that some assets that you already have, like we did with the goal amount, you can assume that there are some assets which can be liquidated in order to meet these loans. Like you could have, PF money coming in, or some other asset that can be liquidated. So what you want to do is to kind of put the net liability. So let's say the outstanding loan here we have, say, 25 lakhs, and we have assets worth, say, 10 lakhs that can be liquidated to meet that outstanding loan. So the net outstanding that the insurance should be able to cover is only 15 lakhs. So in step one, we calculated how much of the expense contribution needs to be met. Step two, we saw how much of goal contribution needs to be met. And step three, we are seeing how much of liability or obligation contribution needs to be met. So these are all the financial aspects of your income that your insurance needs to cover. Okay, when you put all these three together is when you get the total insurance cover that you need in order to leave your family comfortable if anything happens to you. So that amount is actually 6 crore here. Okay, so it's not thumb rules, it's not general assumptions. You decide how much cover you need based on your expenses, your goals, your debt, so that you do not wind up underinsured. Like, suppose you took a 1 crore policy, this is clearly going to be underinsured. Or suppose then you took, a 5 crore policy, you would still be underinsured. So by doing this very specific calculation, you ensure that you are not underinsured or overinsured. Like, suppose, this amount was only, say, 2 crore and you took like a 5 crore policy, you would needlessly be paying higher premiums. Instead, that money could have been invested and used somewhere else, right? So don't go by general assumptions. This is a very specific situation only for you, and this is very easily doable. It's not, these are numbers that you would already have, and this tool makes it very easy for you to calculate. So you can use this tool, arrive at your life cover, and bear in mind that this can be a changing goal. If your lifestyle changes, like suppose you take on a big debt or you pay off a big debt, or you don't have that many dependents anymore, for multiple reasons your cover might need undergo a change. So in that case, when you have major lifestyle changes, come back, calculate it to make sure that you are insured for the right amount as far as your term insurance goes. Okay, so check out the link below, do the calculation, and get the right insurance amount. And don't forget, subscribe to Prime Investor for more such videos on all personal finance aspects, and check out our website primeinvestor.in for more such calculators and recommendations. Thank you.